Hello everyone. In this video, we are going to discuss a market leader of pipe and fittings. So if you see the current market situation, the whole market, even the stocks are correcting too much because of the war and uncertainty. Meanwhile, I saw the stock of Astral. It was getting high and never high. So I was like quite surprised what was happening in the business. Then I started researching Astral and the whatever finding I got and whatever the management has said, what are the development going in the business. So everything I will cover in this video. So let's start with the video. In this video, we will cover Astral in 5 sections. First section will be business vertical. Second will be demand and margin. Third will be capex. Fourth will be valuation. And the last outlook. So let's start with the business vertical. So currently, everyone knows the stock. I think the 90% plus audience knows the stock and what business vertical it has. So you know that they works in pipe and fittings, but this vertical is only 70% of the whole business. It contributes only 70% revenue. 25% rest came from adhesive. You know Fabcol. This is also a adhesive. Just Fabcol is a brand name, and the product they sell is adhesive. So adhesive, they also sell. They have some brand name, Bondly Tight. You have maybe heard about this. So it generate 25% revenue for them, and the rest 5 to 6% came from the bathware segment and sanitary ware and special paint. So sorry, not sanitary ware, only bathware and special paint. So if we see the current vertical, paint, the adhesives, the bathware, and the paints. So if we see the business, they were originally only focused on pipes and fittings, but now they are horizontally expanding toward the complete building solution from pipes, from adhesive, from like paint, like and then bathware, etc., etc. Now let's move to the second vertical, which is demand and margin. If we see from the election year in FY25, the demand was very muted because of the elections, because of the reduced capex. So that's why their volume growth was negligible from like 1 to 2%, even sometimes negative. That is the thing going on from last 6 to 8 quarters. But in Q2, everyone was surprised because of the volume growth. It was 20% volume growth. Because of the 20% volume growth in last quarter and around 70% in Q3, we cannot deny that this is the early upcycle signal from the industry. So we have to be quite specific and let's deep dive in the margin and what the management has been writing about this. So because of the high volume and a sudden demand, their margin has been like upward and their margin has been expanded a lot. Their current margin guidance is between 16 to 18% for pipe and fitting business, but their current margin is 19%. If you see same in the adhesive business, their margin expectation and management guidance is 14 to 16%, but current margin is 70%. Why? Because of the early demand and like sudden demand. But it is expected that this margin will reduce toward their mean, and the management has guided this also. So we can see maybe in some quarter we can see that their margin will reduce in the pipe and fitting business and adhesive business in India, but the margin in like export business, either adhesive like bathware like pets etc., they are going to see the margin expansion. But if you see the capex, they are do a lot of capex. If you see they are backward integrating. If you see CPVC, which is a raw material for pipe, the CPVC resins they imported from like other player from maybe China or other similar, but now they have set up a factory to make the raw material in home for on users. That is why the movement has been getting because of this raw material backward integration. Their margin can enhance from 200 to 300 DPS, mean 2 to 3%. The overall business margin can grow to 2% and can expand 2%, even more. But they are saying that they will pass on to the customers so that they can gain more market share. And for like everybody knows that they are market leader, but they want to grab more market share. And if we see the current market, there is quite a lot intense battle going on in the market. There is a lot of competition is going in. So it is good that they will pass on some margin to the consumer, and because of this, they will maybe get some market share. So we have talked about the capex, but if you see the capex scenario, they have expanded a lot. They are doing a lot of capex, but if we see, there is a big hiddenness in this area. A lot of capex is going on in CPVC resin and PVC. A big player like Reliance is expanding a lot. They are like doing 70 to 80% total industry size capex alone. So maybe because of this, the industry could go into a consolidation phase, like currently going on in paint sector. Maybe this could be a big challenge in next or in up next year. In FY27, the CPVC plant of Astral is coming up, but the Reliance plant also is coming up in CPVC segment, in PVC segment, etc., etc. So because of this could be a big risk. So let's talk about valuation. If we see the current P/E ratio of Astral, they are trading at 90. So if we see, they are getting premium because of the market leader, because of the innovation. But the 90p is quite high for me personally. This is my personal opinion. If you see, they can deliver around mid to high double digit growth in volume. And if we see their revenue, and at maybe they can grow 25 to 30% in the best case scenario, their pack, and 20 to 25% in revenue. If we see, PEG ratio is around 3, mean 90 price to MA and 30 is growth, which is like best case scenario. It is 3 plus PEG ratio, which is quite high for personally me. If I will invest a stock which is market leader and bring it at around 20 to 25% in short term and maybe mid term, but it is a cyclical industry, so I am not that confident enough to give that much premium to a company. Maybe if the stock corrected came around 50 to 60, maybe that could be a buy range for me, but it is your own opinion. You should also consider your own research before doing any buy and sell. Do not do any buy and sell call based on solely my video. So this was the valuation part of. If you see in the peer also, they are expanding a lot. So clearly I am keeping distance from Astral. Maybe in pipe and fitting business, there are other businesses. Like if you see in the steel and seamless pipe, a business named Venus Pipe, they are doing very good. We will talk about later in next video. So they are doing very good. They are growing around 25 to 30%. Their PE is less than 20. So seeing the growth and the price toward the, they are trading at 0.8, 0.7 BEG ratio, which is quite good for me. I would rather invest in Venus than Astral. Maybe I might be wrong, but you should always consider your own opinion. Do not follow me or buy and sell call. This was, I shared my personal research, whatever things I found with the business. So that is it for today. We will discuss something new, some new businesses. Maybe we will discuss Venus next video. That is all from my side. Thank you.